did you miss us? We missed you. Welcome back to the morning show, Stock Market TV. Spencer, JC, Alfonso. No Steve today. Steve getting some much needed R&R, but we will miss him. But we missed you, and we hope you missed us on Friday. Whenever I like take a day like off, it messes with the routine. You know, I feel like I need a day, one day to make up for every day that I missed, right? So like tomorrow I'll feel with it. So that's what we got today. All right. Couple earnings to discuss as well. Domino's, Berkshire. We'll definitely talk about Berkshire today for sure. Read the letter from Buffett over the weekend. Great stuff as always. New guest on the show, Stephen Weitzel. He was at our New York event, but what, a month and a half ago. He'll be on at 9. He's got some charts to share. And it is Monday. We'll have Mr. Ian Cully on this show as well to talk some FIC. So that's the plan. Good morning, chat. Hope you all had a great weekend. Let's get this show on the road here.
All right. Well, that was an abrupt ending to that. How's it going there, Mr. Spencer Israel?
I don't know what happened there. Yeah. Good, man. How was your weekend?
It was fantastic. We had some presents last week. These guys brought over all this tequila. It was definitely not for me. It was definitely for Josh. Josh doesn't drink tequila anymore, so I have all this tequila. So I called some of my neighbors, dudes roughly my age, and I'm like, yo, I got all this tequila. I don't know anything about tequila. You guys know anything about it? And they're all like, nope, we got nothing, but we sure like it, so bring it on over. So we crushed it on Saturday night, and it was awesome, man. It was a good time.
Wow.
Yeah, a lot of tequila. So thank you. I don't know who brought any of that tequila, but you're the man.
You're talking about on Thursday?
Yeah, Thursday night. So I just had all this tequila that I brought home with me.
All right.
I know. That's what I said. I was like, all right, let's go.
Yeah.
It was good. I'm not a tequila guy, but, we were sipping it like on the rocks. It was delicious.
Me neither. Great party, JC, on Thursday.
Tequila Blanco. That means white.
Yeah, see, I thought all tequila was white. So what do I know?
No, some of it is like yellow.
Oh, it's like yellow. It's like, yeah. All right. It's like got that glow.
Okay. It was lovely. It's a good party though. Thank you, everybody. That was fantastic. Good times.
Yeah. I had a great weekend. Went skiing for the first time in 2 days. Learned that I am definitely not in ski shape. My legs are not liking me right now, but that's okay.
That's all right. No big deal.
No big deal.
Listen, at the end of the day, no matter how good of shape you might be in, the first day out on the slopes, you're going to get sore because you're using muscles that you wouldn't be using.
No kidding.
Oh, you're not alone. It's all good.
Yeah. All right. Let's do some state of the markets here and talk about things.
All right. Happy Monday, everybody. Not much going on in the futures market. Dow futures literally flat, 0.00. Mr. Blutarski. S&P futures also 0.0. NASDAQ futures up a little bit, 15 basis points, pretty much flat. Bond futures hanging in there. I got to tell you. To me, that's got to be the most bullish catalyst for equities as we go towards the back end of the first quarter. Is the bond market not crashing? That's kind of a big deal. So big week last week for bonds. Copper rolling over, though, again today, down 1%. Silver down almost 2%. Gold flat. Oil flat. And in the currency markets are relatively mixed. Some up, some down. Some of the emerging market currencies are getting crushed. New lows in Brazilian real. New lows in Chilean peso. But some of the others, like the zloty, doing pretty well. Some of the others. And the old funny money, Bitcoin, up towards 51,400, down 300 points on the day. Ethereum, monster move. New 52-week highs yesterday. Ethereum down a little bit over 1% today, just under 3,100. And then in Solana, we always like to mention Solana, hovering right around 100 total crypto market cap, 1.93 trillion, pushing $2 trillion in market capitalization. Very, very impressive. But I wanted to start out here with the crypto punks. Throw up slide 1. Can you believe so I have this picture on the internet that I own. We should actually show it. You want to see my CryptoPunk? So this thing,
What is this?
look at this. So here, look at new slide 2. So this is
What year is it? We're talking about CryptoPunks now? Oh boy.
well, it's 2024. Try to keep up, Spencer. What do you mean what year is it? Throw up slide 2. Throw up slide 2. This is a picture that I own, right? And it's on the old block and chain.
Yeah.
Right? This is it. This is my CryptoPunk, right? It is worth like over $100,000 more than it was a few months ago. Isn't that crazy? Is it? You know?
Yes, it is. Yes, it is absolutely crazy.
So for me, number one, like great, fantastic, right? So now when my wife makes fun of me because I own pictures on the internet, now she can't anymore. So that's cool. And the other part of it, I think it's really a reflection of what's happening in crypto in general, right? With the price of Ethereum making new 52-week highs literally yesterday, back over 3,000. You know what I mean? Like this is an extension of that. So it's the information, right? So yeah, I own this picture on the internet. Great. How are we going to use this information? Well, I'm in the same boat as everybody else, right? So how are we going to use this information? To me, it's really a function of what we're seeing just in general in crypto markets, pushing 2 trillion in market capitalization, something we haven't seen now in a couple of years. So I think this is just an extension of that. Any thoughts, Spencer, or do you think it's all stupid? What do you think?
I've always thought like this stuff, like the NFTs, the CryptoPunks, the Bored Apes, the yada yadas, is not really it's never what interested me for crypto, right? I was never in it for the pictures on the internet. I was in it for the emerging technology and the potential use cases and the fact that number go up, right? Let's be honest.
Mitchell wants to know, you aren't selling that picture worth 100,000. To be clear, it's worth 100,000 more than it was a few months ago. It's worth almost 200,000. And no, I'm not selling it. This is art. This is art. No, I am a connoisseur of. No, I don't know anything about art, dude. I don't know. I'm in it for the money.
This is this is diversification? Question mark? Question mark? Question mark?
This is part of my crypto portfolio, I suppose.
Look,
and
it is fun. It's fun to get down and dirty and stuff. Like you wanted to like get down and dirty and really, really get in to crypto and have skin in the game. And so I applaud you for it. You have skin in the game, right? And that would
a little too much skin, some might argue.
Well,
Spencer, read the new Chris Dixon book, please.
Okay.
Because the things that come out of your mouth don't make any sense. And rather than me just, mansplaining things to you, you know what I mean? Like, just go read the Chris Dixon book. And anybody listening out there, I finished it. I couldn't put it down. I thought it was fantastic. If you're new to this, if you're like young and you don't really know what happened in the 90s and in the early 2000s, read the book. If you're more experienced and you were around in the 90s and early 2000s, read the book because it's a great refresher. And also, he explains things really well. Like he's like, more like the Morgan Housel book, The Psychology of Money, and then the new one, The Things That Never Change, or whatever the new one is called. Both of them were great books. Can you throw up what the book looks like? Throw up the cover. Morgan Housel in that book didn't tell me anything I didn't already know. He didn't it wasn't like these earth-shattering revelations. It was a great book. He explains things really well. I feel like Chris Dixon is kind of the same thing, but more like internet stuff, Web 1, Web 2, now Web 3, like the differences, what it means.
Yeah, I understand
why these CryptoPunks and NFTs in general are not stupid. Like what it actually means for society, what it means for the future and technology, right?
Yeah, I understand all that. But the differences between Web 1, Web 2, Web 3. I've never bought an NFT, so I guess I'm just look, I own crypto. I own Bitcoin, I own Ethereum, I own Solana. And that's fine for me. That's enough for me. And maybe, if things get a little bit more frothy, I can have some fun going down and maybe buy some shit coins, but for the moment, I'm content. I don't
look at that. Look, put up slide 1 so you can see this. Look at this new 52-week highs.
I don't need more than this.
Now, meanwhile, throw up slide 5. Meanwhile, so this is what's happening here. You're seeing high beta stocks in general continuing to make new lows, relative to low volatility. So you're getting two different stories, right? So it's hard to say, oh, what's going on in crypto and what's going on in the NFT markets or whatever is good for stocks. We're not seeing that at all. It's actually the opposite. Cryptocurrencies keep doing well. NFTs keep doing well. You know, that part of the world continues to act really well. But high beta stocks are just not, right? We're just not seeing it, continuing to see new lows. So, these divergences persist. Obviously, the S&P 500 can continue higher despite these divergences. I'm in the camp that ultimately something's got to give, right? Whether it's the S&P catching down or high beta or money rotating back into high beta. I'm good either way. I don't care, right? Like I'm not one of these like perma bulls or perma bears. I'm a perma. I don't give a fuck, right? That's what I am. And I think that ultimately one of these things got to give. As indexes catch down or money rotates into high beta. Like I said, I'm good either way. One thing I do want to mention is the relentless underperformance from technology. And it's not just the large cap technology stocks that have been struggling, it's the small caps too. So here's technology, large cap tech, which by the way, this is half the XLK is Apple and Microsoft, is very vulnerable here relative to the rest of the market. And let's remember why large cap technology stocks are important. So like while Spencer is like, oh, I don't care about NFTs. Fine. Well, how about Apple and Microsoft and 50% of the NASDAQ and 30% of the S&P 500? Do you care about those?
I most definitely do.
Yep. Right. As you should, by the way.
Mm-hmm.
The CryptoPunk market cap is like 1.5 billion in market capitalization, something like that. So it's not nothing, to be fair. Crypto currency is now pushing 2 trillion. So again, not nothing, but
basically one Nvidia is what we're right.
Basically one Nvidia. That's right. Yeah. That's right. And 2/3 of an Apple, right? Sure. 2/3 of a Microsoft. So half this index is Microsoft and Apple. Nvidia represents a very, very tiny portion, particularly relative to those other two. Relative to the rest of the market, continuing to struggle, making new lows. And then throw up the small cap technology. So this is small cap tech versus the Russell 2000, which is small cap index overall. Small caps across the board are down over the last 2 months. Down. Nothing's up. Nothing in the small, not a single sector is up. I think industrials are up like 0.5%, small cap industrials. But essentially, the entire small cap space has been going down to sideways all year long, right? It started the last week of December. So to underperform something as shitty as the small caps, it's hard to do. Hard to do.
Yeah, somehow, you have to really suck.
What?
You have to really suck, right?
You have to really suck. And technology stocks have somehow found a way to suck more than the small cap indexes, right? Somehow they figured out a way. Hard to do. Hard to do. They found a way. Spencer, what do you think about that?
Is it because all the good ones have aged out of the small cap tech index?
No, because look at small cap tech outperforming straight for years. What do you mean?
No, well, I mean, I'm not sure when that peak was. Sometime in 2013.
What peak?
On this chart, that
last year. Do you not see the x-axis on the bottom with the years? Are you new here?
No, it goes from 22 to I'm just trying to understand when that peak was.
So, what 2013? What are you talking about?
Okay, fine. It's 2013. So no, but my point was
there's nothing in 2013. What are you talking about?
When's the all-time high on this chart? When small cap
23. 2013 is not even on this chart.
Oh, well, that's what I'm sorry. 2023. That's what I meant to say. 2023. Last year.
Yeah, last year.
Whatever. Okay. So if since then, since 23, I don't know. I'm just guessing here. Is the reason for this underperformance just the fact that the good tech companies that were small cap are no longer small cap?
No,
they
didn't just like change the whole dynamic of the thing a couple of months ago. No, they're just underperforming.
Okay.
Yeah, they're just underperforming. Again, hard to do. Underperform small caps. Hard to do. Almost next to impossible. Speaking of next to impossible, throw slide 6 up. Here's an interesting one. So financials, as we know, banks in general have just been a complete disaster. Just the worst stocks on the planet. Maybe pot stocks, but pot stocks don't count. They literally don't matter. I would argue bank stocks matter, right? No matter how little, just in general, they matter. Small cap financials making new multi-month lows relative to the small cap 600. And by the way, if you look at regional banks relative to the IWM, you're getting the same thing. So I'm not like cherry picking indexes here. My
Well,
point
that
was,
was going to be my question.
yeah,
Is you guys look at so many ratio charts, and
yeah.
I can't help but think, and like I don't know how many charts or ratios it took for you to find this one, or but it can feel a bit cherry picked at times, and sometimes I see a ratio like this or any other, and I think, why should I care about this ratio, right?
Here, throw up the new slide 7 so you can see a different look. So the answer is,
No, not
JC,
that
if
one.
if small caps, JC, if small cap financials are essentially regional banks, then why wouldn't we look at the regional bank index? Fair. Why are we looking at the S&P 600 and not the Russell 2000? Fair. You know what the answer is? The answer is we do both. That's the answer. And the S&P 600 small cap obviously only has 600 stocks. The Russell 2000 has 2000, so that's a difference. Also, the composition are a little bit different. The healthcare weighting and the discretionary weighting is slightly different, but you're going to get a very similar picture. And then, of course, we know small cap financials are essentially just a bunch of regional banks. So why don't we look at the regional bank index? Yeah, the answer is we do both. And you're getting the same, right? You can show both charts, you're getting the same picture, same exact thing. So why should you care? Well, if you think small caps are gonna go higher, you have to understand that you've got 230 regional banks in the Russell 2000. So it's very difficult for the Russell 2000 to advance without financials participating. So, like last year, for example, before the fourth quarter and the IWM ripped, people were like, JC, small caps haven't been working all year. My argument was, well, maybe your small caps aren't working, but small caps are working. Consumer discretionary, small caps, consumer discretionary, small cap technology, small cap industrials. Not only were they performing all of last year, they were actually outperforming the large cap indexes, massively outperforming the S&P 500 and the Dow, massively. So to suggest that small caps are not working because the Russell 2000 isn't working is really disingenuous. That's just bad math, right? A lot of them were. This year, you can say that small caps are not working because small caps are actually not working. Even the best ones, even small cap tech, as you can see, making new relative lows, obviously they're not working. Small cap industrial, small cap discretionary, even the leaders have not been working. So what does this mean to you, Spencer Israel? I would look to the leaders in small caps, like discretionaries, like technology, like industrials, or former leaders, I should say, as a heads up that maybe other small cap stocks are doing well. If you're interested in the indexes, like if you own the IWM or the IJR and you want to buy the indexes, then you're really going to need biotechs and regional banks to get going because that's a quarter of the entire index, just those two. You got 500 stocks that are either a biotech or a bank in the Russell 2000. So it's an important group from a weighting, index weighting standpoint. So that's why you should care. What do you think about how'd you like my
What
answer?
does it mean? What does it mean that the KRE SPY ratio looks similar to this? Not exact, but similar in the sense that it's at, it's
Similar in the
near.
sense that it's all at all-time lows. Well, a
Well,
couple of things.
it's near support. Yeah, okay, you could say it's near all time lows. Sure. Yeah.
Well, I'm saying that because they are.
Yeah. Yeah.
So, so the reason when you compare regional banks to the S&P 500, number one, there are no regional banks in the S&P 500,
True.
right? There are no mega cap tech stocks in the regional bank index, right? By definition.
Yeah. Of course.
Yep. So regional banks making new all-time lows on a relative basis is really just further evidence that America has probably way too many banks. Some of these got to go. 200 and 250 banks. Do we really need that? By the way, there's more of them. Those are just the ones in the index. Do we really need that many? I like how the Canadians do it. What do the Canadians got? 4? That's a good number. 4 is enough. How many more do you need? No?
There's probably thousands of publicly traded bank stocks in this country.
I don't know about thousands.
Well,
but it's too many.
If you consider all the banks that trade off exchange on the OTC markets, there's hundreds there alone, right? Like there's a lot.
This is a good question. I'm actually going to check right now because I do know there's like 200, 250 in the Russell 2000.
Yeah, but there's
Let's.
like another 400 in the trade, like off exchange. So,
So what would a regional bank be? A bank stock that's less than 2 billion in market cap?
oh, I guess I don't know where you draw the line on the low end of that. I'm not sure.
So
I guess
just regional banks in
regional.
general.
Okay, so regional, they're not that many. Community
Publicly
banks,
traded regional banks are
community banks. There's a
200,
shit ton.
362.
Okay, but and then if you got a community banks to that, it's in the thousands. There's a lot.
Yeah, you got a bunch of these little like 30 million, 50
Yeah,
million, 100 million. You got 40 publicly traded banks that are under 100 million. You've got, let's see, in terms of micro caps, let's see, you've got officially under 300 million, which would be considered a micro cap. You have 145 regional banks that are below 300 million.
yeah,
So that makes
and
sense. So you got another 200 and something that are above 300 million, which are the ones in the Russell 2000. That makes sense. That makes sense.
yeah. Uh, Someone asking in the chat, is there somewhere you can go to look at banking licenses? How many banking licenses there are? Yeah, probably like the OCC office of the
Yeah,
comptroller of the
Barry
currency.
Ritholtz, and I'm sure other people do
If I
too.
had to guess.
Barry Ritholtz has always kept track of bank failures,
Yeah,
and my suspicion is that's based on the licensing. If I had to guess, so you can see bank failures over time. There's not many these days. I think there was a few last year, but like back in the day, like in '08, these bank failures, like there was a ton of them. So like
sure.
this was like a great data set, but I know he definitely still keeps it.
All right.
Yeah.
All right. So takeaway here: banks no bueno. Small caps no bueno. Small cap tech, small cap banks also no bueno. Um,
Johan Jager says this is getting tired as fuck. JC just keeps posting these until the market eventually confirms. For the record, the market is not confirming anything. This is literally live data. This is all happening as we speak. This has nothing to do. Nobody's waiting for confirmation. I've been doing this since late January and has zero significance. Zero significance to what? Regional banks keep making new relative lows. Tech keeps making new relative lows. Confirmation of what? If you're not happy about it, Johan, you could go watch something else.
hey, how about the week that consumer staples just had? You see, it's only 1 week.
Les
We had
Phil
some
said, kindly leave, Johan. If you don't
we had
like
some
it, nobody cares.
we had some rotation into staples last week. Some outperformance.
Well, we've been seeing staples outperforming consumer discretionaries all year. So that's
Well,
not really that
okay,
much of a surprise.
yeah, but outperforming every other sector we have not been seeing. So, just
No,
again,
they've been outperforming other sectors. What do you mean?
not every other sector, not all of
Well,
them.
consumer staples have been outperforming energy for 5 months. Consumer staples have been outperforming.
Yeah, again, yes, I know individual sectors, sure, not all the sectors at the same time. Is my point.
Right, which is
Right,
never going to happen.
it happened last week.
The staples were the best performing sector last week.
Yeah,
Really? All
yeah.
right. How about that?
That's what I'm saying. How about that?
How about that, Spencer Israel? How about that?
Yeah,
Spencer Israel coming in hot with the data. Coming in hot. Coming in hot.
that's right. All right. We're gonna have Stephen Weitzel from Reveille Wealth Management on in 5. You want to talk Berkshire quickly? I think we have the Berkshire chart. Well, let's talk Berkshire.
Please.
This is one of my favorite things to do is reading Buffett's quarterly letters, his annual letters. Obviously, this company's a monster unto itself. A lot to say. They absolutely nailed their Japanese investments from a couple of years ago. They have made a killing on them. Their cash pile continues to swell, and that continues to be the question every single quarter: is what the heck are they going to do with all this cash that they have? I'm going to read you the one paragraph that jumped out to me in Buffett's letter. This is on page 6 regarding that cash question: what to do with all this cash. There remain only a handful of companies in this country capable of truly moving the needle at Berkshire, and they have been endlessly picked over by us and by others. Some we can value, some we can't. And if we can, they have to be attractively priced. Outside the US, there are essentially no candidates that are meaningful options for capital deployment at Berkshire. All in all, we have no possibility of eye-popping performance. So basically saying, look, we're so damn big, we got so much money that there's really only so many companies we could buy that would move the needle for us. What he'd rather do is use the as they did in 08, 09, use their cash pile as like a war chest, right? And wait for some sort of disaster and deploy in that situation, um, or use their money to stave off a crisis as they did in 08, 09. So essentially, keep waiting. Berkshire is in no rush to use any of their cash for anything at this time. And look, their operating earnings, all that is continuing to grow. Stock is up this morning, but just a monster company. Great year, and that's pretty much all I have to say about that.
Remember people used to say, "Oh, Berkshire's only up because Apple's doing so well." Remember people that are really bad at math? They used to say that.
Well, I mean, they freaking speak the Apple thing. They nailed that one.
My point is, Apple's been getting the crap kicked out of it, and Berkshire's still making new highs. It has nothing to do with Apple. They don't even own that much Apple. Like, I mean, they own a lot, but it's not as much as people think.
They own a lot. They own they own yeah. They own, I forget what percentage of Apple was in their portfolio with the first time they bought it, but it has ballooned to what, 45?
No, it's like 18%, dude.
No. Of the public portfolio, maybe 18% overall.
Right, which is all that matters because we're talking about Berkshire Hathaway. We're not talking about their public portfolio.
But we don't have as much visibility into the size of the total pie between Geico and all these other
private companies. We have it. It's there.
We have it.
Yeah,
it's there.
Yeah, it's there.
All right.
They own it's like 18% of Berkshire Hathaway, which is a lot, but it's not like 50% that people say. Like T-Man is talking about 50%. It's not 50%.
It's 50% in the 13F.
It's 15% of like their public holdings, which is like maybe a third of their overall holdings.
Right.
It's like 18%, 19, something like that.
So in any case, Berkshire Hathaway is an absolute monster. By the way, if anyone's going to the annual meeting in Omaha in May, I will be there with my dad. So
nerd alert.
Shoot me a DM and maybe we can meet up. But yeah, this has been on my bucket list for years, so very excited to go.
I kind of want to go too, man.
Oh, you cannot go. You made fun of me every time I bring this up. You make fun of me, including just now.
It's a Comic-Con. It's a Comic-Con for finance.
Not invited.
Nerds.
Not invited.
Are you kidding me? I'm the biggest Warren Buffett fan ever.
Not invited.
Charlie Munger, one of my favorite technicians of all time. Shout out Charlie Munger.
Very, very nice, heartfelt tribute to Charlie Munger. Obviously,
that was nice. That was so nice. You know what I worry? You know how like sometimes like, a husband and wife that have been married for like 50, 60 years, one of them passes and then the other one immediately passes right after. Like you see that a lot. Yes. I'm hoping this is not going to be the case with Uncle Warren.
I mean, knock on wood.
That would be a sad day. Sad day for the finance world. Sad day in my household.
Yeah.
All
right. Let's pick this mood up a little bit. Let's bring on our guest today, Stephen Weitzel, managing partner, Reveille Wealth Management. And we saw him in New York last month, and he's here now. So, Stephen, if you're ready, we're bringing you on.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
It's nice show you got going here.
Hey, Mr.
What's up, boys?
Hey.
What's going on?
What's your handicap these days, Weitzel?
Dude, it's on the rise. It's a 5.2 as of this morning.
What is a 5.2? I didn't realize it got into decimals.
Oh, it definitely gets into decimals.
Got it. Shows you how much I know. So 5.2 is pretty disappointing for someone who plays as much as you do.
It is disappointing, but you know what? It's early in the year. And I'm going to use it to my advantage.
Has the year started? Has the year officially started, golf season, or not yet?
This is when the rust comes off. So member is at the end of April. So as long as I'm sharp by then, I'll feel good.
All right, you're coming up this year. We're playing my course, right?
I'm looking forward to it. Is Strazza coming?
Yeah, we can get him.
Where is Steve, by the way?
Steve's a little weekly vacay. Steve, we pushed him hard last week. We're giving him a little break.
Good for him.
Yeah. We had a good time last week in New York. Really good time.
Yeah, was it JB's birthday last week?
Yeah. So Josh Brown and I have been friends for 20 years officially now, and our birthdays are about a week apart. So historically, Josh likes to throw himself birthday parties, right? And then like he includes me. So it's like, oh, it's me and JC's birthday party, right? He's been doing this for years. And so that people don't catch on to his schemes that he likes to throw parties for himself. So this was that. So this was our birthday party, quote unquote. But we all know the truth, right?
That's
and
right.
Those who didn't know, now you know. So shout out Josh Brown. Shout out.
I got to say one thing. This idea of you going to Omaha for the Berkshire annual meeting, to me, is hilarious. You know how many fundamental people are going to be there? You are going to be a major fish out of water.
That's okay.
Thank you, Stephen.
First of
He's
all,
a major fish out of water.
I have more friends that have a CFA than most people on this planet, for the record. So I'm down for the get down. Number one. Number two, I hear it's a party. I'm good at those things, right?
That I wouldn't know. Spencer, you've been there before, right? You can.
I have not. No, I have not been.
No,
I'm going for the first time.
Also, Stephen, just historically, like when everyone's scared and people are like all like freaking out about the market, we sell naked puts in Berkshire Hathaway. Do we not?
That's right.
Been doing that for years, very successfully, I might add. So why would that not be cool with me? Plus, Uncle Warren doesn't have many shareholders meetings left.
That was my thought process too. Okay,
yeah,
Stephen,
that's right.
Stephen, let's talk about what's on your mind here. You and I.
First of all, explain to people what it is that you do, what perspective you approach the market from.
Here at Reveille, we have a rules-based investment discipline that we run where we're identifying market trends and aligning our portfolios with those trends for, whether it's equities, fixed income, commodities, real estate, those types of things. And so, one of the things that I mentioned to Spencer prior to coming on today is that, one of the things that I know you and Steve have been talking a lot about is that there's potentially this deterioration under the surface. It may not be identifying itself yet in terms of an expansion in new lows, but we're seeing an absence of new highs. We would expect something like that given that thrust that we saw in December. However, my question is, I wonder if this is more evidence of potential rotation rather than, some sort of just an overall market decline, right? So we're, since it's February and it's the beginning of spring training, right? I know you're a baseball guy, JC. So
was
right.
Don't worry, Stephen, you got me.
But this idea of, we need to be situationally aware of what's going on in the market, right? So I remember coaching my son's baseball team a couple of years ago, and right, so we had runner on second with 2 outs, and I tell my third base coach, I'm like, hey, you can't send him, right? If the ball gets hit on the left side of the infield, right, you can't send him until the ball gets through because we're not running into out number 3 at third base. Right. So in the same way, we need to understand what's going on in the market right now and have that inform how we want to be positioned. And so, I went through the deck from the mid-month call that you guys put out, and you've got a lot of large names that are running into their 2021 highs, pieces of the Mag 7, so Google, Amazon, very large contributors to the S&P, to the NASDAQ. And at the same time, you've got things like the value line geometric index that is retesting these former highs, right? Prior lows for like the 4th, 5th time.
At least, right.
You've got the equally weighted S&P index retesting prior lows, the COVID lows relative to the cap weighted index. And so to me, I think we may be primed more for some rotation here versus just general deterioration in the market.
So I got 2 comments on that. First of all, well said,
Thank
across
you.
the board. Number one, I'll start with the market sort of the lack of new highs that we're seeing. It really comes down to the fact that in December, everything was going up. So mathematically speaking, if everything is going up, it's hard for more things to go up.
That's
Right?
correct. Yeah, especially on that shorter time frame.
Right, exactly. So, like, literally, it's just math. Everything is already going up. So mathematically, you can't have more things going up. So a lack of new highs is just simple math. It has to be that way, right? And we certainly have. You
That's right.
reiterate that we haven't seen any expansion in new lows, 100%, right? No new lows. No, mathematically, you cannot have a market correction without stocks falling in price, right? That's what I love about math. We'll all agree there. The other thing that you mentioned is the rotation. And while I agree that we've seen some rotation, I wouldn't say you're getting rotation, like, for example, into industrials. We've seen strength out of industrials for a while. So it's not so much rotation into industrials as it is simple rotation out of technology, right?
Yep.
And then, so what does that mean?
But
Is it,
so where's the money going though?
that's what I'm saying.
Right.
That's what I'm saying. So where is it going to go? And it's not just large cap tech underperforming, small cap tech's underperforming, like it's struggle city in technology. And if technology represents 30% of the S&P and 50% of the NASDAQ, if we're getting rotation out of those, I feel like
buyer
no matter
beware, right?
where it goes, it's not going to be right. You know,
Yeah, it's not a great setup for those areas. Given the fact that so much of those indices are comprised by technology. So kind of tying into Spencer's comment about reading through the Berkshire letter, where is Buffett basically not saying there's nothing that we can buy domestically that's going to move the needle for us, right? Everything is fully priced. I either have this war chest of cash that if there's a crisis that comes along, I can come in and be the buyer of last resort.
and he's done
like
that.
he was
So
during the financial crisis, right?
Proven that, yeah.
Or, some of his last buys that he made a couple years ago were these Japanese financials. And so I wouldn't be surprised if if they continue to dig in and look for opportunities outside of the US. And you look at the foreign indexes that have made no real progress for a long, long time. And at the beginning of my career, that was what was hot. That was what everybody wanted. And now people have forsaken those areas of the market. And there's been a lot of concentration here in the US equity market. And if we're, my question is more along the lines of if we're starting to see some of these large names run into former resistance, you've got guys like Buffett that are saying, there's nothing really for me to buy here that's going to move the needle in the US. Take a look somewhere else. There are plenty of, it's a big world out there, right? There's I did a video with one of my partners a few weeks back where, we were talking about the amount of global market cap that the US equity market comprises relative to our contribution to global GDP. And it's about as wide a spread in terms of the percentage of global market cap that we make up relative to our contribution to global GDP that we've ever had. And so to me, that suggests that there is more value in other areas. And I wouldn't be surprised to see somebody like Buffett or people that are like him that would take over for him at Berkshire that would be looking for those types of opportunities, because that's probably where they're going to get more bang for their buck.
When you look at some of these, like when you're setting up the portfolios for your clients, right?
Yep.
And you're seeing areas like energy with no exposure at all in the S&P 500, or materials, you can argue, industrials to a certain extent. There's more of those, but you could really, and then when you look at the NASDAQ, you've got no industrials, no banks, no no energy, no materials, no real estate. You got none of that stuff. Like, how
Yep.
do you think about getting exposure into some of those areas that are just not giving you that at the index level? And does that change from cycle to cycle? How are you thinking about it now?
Yeah, I think you again, you definitely want to take the temperature of the market when it comes to making capital allocations, and you want to do the best you can to put the wind in your sails. You want to try to buy relative strength. Um, not only should it give you a good boost when the market's doing well, but by definition, relative strength is going to have less variance, less volatility. And so, I think if you're, to your point, if you're looking at things like energy or real estate or industrials or something like that, you're talking about the more value oriented areas of the market. And so, again, if you're looking here domestically, you look at the relationship between value and growth, especially in the large side, then you're retesting those former highs. I don't know if you're at a new high there. Do we have that chart?
You have it, Spencer?
The value
You got
here.
growth
What do you want?
versus value.
Large cap?
Yeah, large cap.
I have it somewhere.
So on the large side, you're much closer to either retesting those former highs in that ratio, or maybe you've got a slightly new all-time high. Although I wouldn't be surprised if you saw some sort of bearish divergence
Slide
on the
one.
RSI there. You don't quite see the same thing down the cap scale in mid cap and small cap. Do you have something, Spencer, that we go back and look at the highs there in 2021, compare where we are now to the 2021 highs?
Yep, I'm doing that as we speak. Throw up the next one, Spencer, which is the RSI that he was mentioning.
Yeah. All right.
But so I think, JC, when you see
Also, we have slide 18. Alfonso.
yeah, when again, just a situational awareness of trying to understand the context of the market that you're in, taking the temperature of the market that you're in. We're looking for probabilities here, and so there you go. So we've got a slight new all-time high here in this ratio between the large cap growth index relative to large value. I'd be interested if the RSI was on this chart to see if we've actually achieved any overbought conditions there that are somewhat corroborating this advance. My guess would be that given what we've seen at the security level inside of that large growth index, I'm going to say that RSI probably is not overbought. Now, it may not be overbought yet.
On an absolute basis or relative?
No. I'm saying if you just had RSI of this ratio right now.
Throw it up. It's the next slide, Spencer.
Yeah, I'm thinking probably on a weekly time frame, I would be surprised if you saw. Yeah, there we go. So we got a little bearish divergence there, right? Certainly we're getting overbought on that recovery here throughout 2023. But again, I think this is one where you're either going to wait to see if this thing can dig in right here, or is this somewhat lack of confirmation under the surface? Are you set up for a false breakout here, and then we really start to see some rotation into these other areas? Because you've got areas like energy.
Doesn't it all come down to rates in that case? Like, if rates are ripping, I think you're right. That's going to be a failed breakout, right?
Rates,
I think
maybe
rates
it's the
have
dollar
to roll over. No,
maybe it's the dollar, right? Maybe.
They're moving together these days, though.
Yeah, I mean, I guess they are, right, on an inverted basis, right, for the dollar. But yeah, I would think that, and I don't know exactly what the catalyst is, right? If we knew what the catalyst was for these things, then we wouldn't be here. We wouldn't be here talking about it.
Isn't it rates? And we are talking about it. How is it not rates?
I think rates are a function of it. you know,
Let me
if
ask you this, Steven. You're a smart guy, right? Don't listen to what people say about you. You're a smart guy, in my opinion. If rates rip from here, what does this
Yep.
ratio do?
Well, here's the interesting thing. You would think, just based off of what it's done recently, that it continues to move higher. However, in 2022, higher rates was a negative for technology.
Right?
Right? This idea that
Yeah.
rates moving up meant that these long duration assets, where they have these, larger cash flows in the future, getting discounted at higher rates, which I know is something that you love to talk about, being a technical guy.
By the way, I do talk about that because one of my fundamental friends actually showed me like their calculator, and he showed me how like the value of future. I swear to God, he showed me
You
how
had
like the
never seen
value
the
of future
calculator
earnings.
before, right?
What?
You had never seen the calculator before?
I had heard about these things, right?
Yes.
Like I think I saw my grandmother have one once back in the day. So
Yep.
anyway, this is one of the fancy calculators on a spreadsheet, right? I don't know if you have one of those.
I'm sure I
Strazza can
do not.
introduce you.
Yeah.
Strazza's a gentleman on the streets, but a freak in the spreadsheets. He's one of those.
Yes.
So I saw the calculator, and like I had heard about like how higher rates are bad for tech and the future earnings. But when you see it, like if you have one of these funny mental friends, have them sit you down and show you like the actual math about how it impacts it. It was wild, man. It was wild.
But here, isn't it odd that in 2022, when we first started seeing rates move higher, it was a terrible environment for tech. And then last year, rates didn't not move higher. I mean, they continued to advance.
Yes.
But somehow you saw tech with a big bid.
Yep.
and
Outperforming
so,
too.
So somewhere like that correlation flipped. And so this is where, and I think that this, you and I have talked about this before, that it's really hard. You got to trade what's in front of you, because if you're trying to say, well, because of this, that, right, or because the last time this happened, that happened, the further away you get from the thing that you're trading, the higher the likelihood that it may go wrong, right?
That's right.
If you're right on that, down the line, it's like hitting a parlay. If you're right down the sheet, you could be really right. But you just got to trade what's in front of you. But so back to the question here, I would think that if we see rates rip this year, or if they continue to move higher, I was looking at the ratio between tips and treasuries the other day. That thing is not fallen.
No.
And if it's not fallen, then maybe the path for rates is higher.
Well, the ratio of tips to treasuries looks like 10-year yield.
Yeah.
As it should, I suppose, right?
That's right. So guess what? The low end for the 10-year has been what, around 380, 385. Is that right?
Yeah.
And so, unless we can get back beneath there, then, the path for rates could be higher. I will say, I think that, we're probably not likely to see the Fed take any action until later this year, would be my guess.
How much guessing of the Fed do you actually do, though?
Well, I'm going to tell you, when I say guess, the reason I come to that is, if you just look at the Treasury curve, and the way that I learned it is that all of these Treasury maturities, right, are just forward contracts trying to estimate what the 1-year rate should be at the time of maturity. So a 1-year bill, the yield on it today, they're trying to approximate what they think the yield on that 1-year bill is going to be a year from now. And you look all throughout last summer, and from May, when rates really started to shoot up through October, which was a bad period for risk assets, right? But the front end of the curve was stable. It did not move, maybe a basis point month on month for that entire period of time. it took a step down by 25 basis points in November of last year. And so, to me, that'd be suggesting that the market isn't really anticipating that the Fed is going to be doing anything with rates until probably November of this year, which would correspond to that little election that we're planning to have here later this
The little
year.
one. It's a little one. Little one.
That's right. It's just a little one.
It's just a little guy.
Here's, the beautiful
but
thing.
Stephen, if the narrative is that the stock market has been ripping over the last, let's just say 3-4 months or whatever, in anticipation of lower rates, I see the U.S. 10-year yield making new multi-month highs every day. Like, what lower rates?
That's right. And so something's got to give there, right? If now, of course, whatever the narrative is may not be exactly what's been driving the asset prices. That's just what we're hearing. That's just what they're saying. But if, and we know that, or I would say we believe that the ripper that we saw in the fourth quarter of last year was predicated on this idea that we're going to see the Fed start to step back, start to cut rates sooner, maybe more quickly than we anticipated. Thought that there would be a first cut in March or something like that. Well, that's off the table at this point, presumably. And so, that narrative, the interesting thing to me is the Fed hasn't changed policy for, I don't know when the last time was that they raised rates, right? In maybe May of last year, something like that.
Sounds right.
They haven't raised rates since May of last year. All they've done is jawbone, and we've seen the 10-year at 5%. We've seen it at 3.80. That is a massive range for no change in policy. And so, I think the best thing that could happen for risk assets probably is that we see lower yields, lower dollar,
or flat yields,
yeah,
stability in the bond market versus it crashing, because it's been crashing. Bond market's been selling off the entire year.
Yeah. So I mean, it's down a few percent, right, for the year. I remember going back. I guess this is the beginning of 23, maybe late 22, when you were doing one of your monthly calls, and you were saying, look, the interest rates had ripped, and the idea was the equity market wants to see the bond market just stop going down.
Right.
And the best thing that could happen would be for bonds just to go sideways.
Yeah.
We continue to see bonds sell off for, the preponderance of last year until they finally caught a bid in late October, early November. But we'll see if rates can dig in here. They're at the point where I'm looking at some of these longer term treasury charts here.
I was actually pretty impressed with the bond market last week, not gonna lie.
Yeah,
Held in where it had to.
You had some decent candles there, right?
Yep. Junk bonds held where they had to also.
Yeah, credit spreads have not been deteriorating.
Nope.
And I think that's been the biggest tell all along.
Yeah.
Is that if that ratio is moving higher, it's hard to be bearish.
Agreed.
It's hard to be bearish if that ratio is moving up.
And credit spreads remain tight, and you're not seeing the prices of stocks going down. Like, there's nothing bearish about that.
No. And so that's why, to me, it's more of a question of rotation than deterioration.
Into what, though? And if it's rotating into sectors that have no exposure in the S&P 500 or the NASDAQ, what are those indexes going to do?
They may not do anything.
Right.
Right. And so
I think we've seen a lot of that, right? We've seen these indexes just not do much.
But right. So, think about if you're getting rotation and if you're going to get rotation down domestically, down the cap scale, is this not where you would expect it to happen? Right. This is previously where you saw rotation happen. It happened back during COVID with that equal weight versus cap weighted S&P.
Doesn't it come back to rates? Are you going to get that rotation into smalls if rates are breaking out?
Again,
Probably not.
This is where I think, if the further we get into trying to guess where these things are going, I think we have to look at them individually. And so it would maybe add up if we saw rates stop going up, that you got that rotation, right? Because
Sure.
it's probably,
they don't have to go down, just stop going up.
Yeah. Here's the funny thing to me. Like my entire career, all I heard was that, and there are even funds out there that suggest that if interest rates are rising, that you want to own financials, right? But because banks theoretically are supposed to do better when interest rates rise. God, that could not have been further from the truth last year, and you had rippers.
Yeah, but also,
rates.
Stephen, the majority of your career and mine, you had a positive correlation, a positive relationship between equities and rates, right?
Yeah.
That changed a few years ago, where now it's a different environment like it was in the 60s and 70s.
Correct. Well,
so it's not just a regional bank relationship. I think it's general in the bond relationships, right?
No, I agree. I mean, the idea that, really for 40 years, from the early 80s through late 21, when rates, were really, we're in this secular bull market for bonds. So, I mean, it's a transition, maybe, it's a new world for bonds out there now. If we're going into a world with secularly higher inflation, that's not great news for bondholders, right? As a general rule. And so, I mean, I think that there are a lot of individuals, institutions that are wondering, how do I allocate my capital, in this new world that we're moving into. Again, I think that we're going to start to see more rotation, not only down the cap scale here domestically into areas that are not as expensive, but I think you're going to see more rotation outside the U.S. You need a weaker dollar really for that to happen. But if
where outside the U.S.
Well, we're seeing Europe making new highs because they don't have any tech stocks. It's all industrials over there.
Take your pick, Spencer. So
China.
Here's the
Latin America outperformed the U.S. last year. U.S. was an underperformer.
China, Stephen.
Yeah. So here's that one chart I sent you guys, right? The B of A fund manager survey, where they were talking about the most crowded trades, right? That the two most crowded trades that they cited, number one was like long Mag 7, right? And then number two, short China. That could you imagine the unwind? Could you imagine what the rotation would be like if all of a sudden, Mag 7 is not through the roof, and if China isn't imploding every day?
Well, to be fair, we're making new 6-7 week highs in China relative to the S&P 500. So we've started to see some of that unwind.
Hey, does that surprise you? If one of the most crowded trades out there is to be short China, so our mutual friend Larry McDonald used to tell me that some of the biggest trades out there are the ones when things go from like horrible to just really bad.
Right.
And that if the situation in China has been horrible, but now it's just going to be really bad, you could have a massive move between now and there. And if you got a lot of people that are leaning into either a short China position, I think outside of just kind of the basic indexes that would follow EM, a lot, I've gotten a bunch of emails over the last 6 months or so from fund companies where they want to talk about their EM fund ex China. And I EM ex China has definitely performed better than EM including China.
New 52-week highs.
But guess what? Most of those EM ex China funds, they didn't come out in in August of 2008 when China was at a peak. And they're always late to the market. I mean, how many times JC, have you talked about when did the home builder indexes and stuff come out?
The day the home builders peaked, actually.
Yeah, and so
for the week they peaked.
And so if you've got all these Johnny come latelys in the EM ex China space, and everybody wants to take away their China exposure at the exact moment that it's probably going to run. I know that a number of these S&P X energy type funds were coming out in probably February or March of 2020, maybe April, right after that. In 2009, it was S&P X Financials.
Of course.
So they always take away the thing that has crashed.
The coal ETF, they took it out right when you needed it the most.
Yeah. And so again, if you start to see some unwind, if you start to see, people step away from these Mag 7 names, and again, you look at them on an individual basis, Amazon, Google, some of these that are running into former resistance, right? You would expect that they're going to take a breather there. And so, I mean, those are major components of that space. And so if people start to say, listen, I'm going to go and look for something else, and then if that short China unwind starts to happen, I think that could be a major move. If you look at EM relative to the S&P, I mean, or the S&P relative to EM, it's way through its former highs. And so if that thing somehow, some way turned into a false breakout, it'd be a massive rotation the other way.
Yeah, and you're probably going to see a lot of rotation and a lot of other things too in that scenario. So let's finish with this, Steven, before the fun police kicks you out. Speaking of really, really terrible to becoming maybe less terrible, those Yellow Jackets, how many wins?
Maybe.
Over under on how many wins this year for Georgia Tech football?
Over under. I'm going to set it at 7. I'm going to tell you where I think we're going to be. But listen, I think it's hilarious that every time, JC tries to give me so much crap about my Yellow Jackets, but his Hurricanes, he can't get past me, baby. Not in football, not in basketball this weekend. It's unbelievable.
What about golf, right? He's a big fan of Georgia Tech golf. What about pitchers and catchers reporting, spring training getting going? Braves, over under how many wins in the regular season?
Let's see. We'll set the over under for the Braves at
85.
I was gonna say 89.
Whoa.
I'm gonna go 89.
Okay.
Yeah.
All right.
I would go high. I go higher than both of you.
All right. And then are you a Hawks fan, or is it just too hard to be a Hawks fan?
No. Listen, I've never really been into the NBA. Big college hoops fan, but never really gotten into the NBA, and that's probably because
you're not missing it. They haven't done shit since Dominic.
No,
Steven, when is Georgia Tech going to actually be good at basketball again?
We're on the edge. We're on the edge. I'm gonna tell you,
okay.
I remember when I was in school there, the vibe around the basketball games, right? So they don't call it the Thriller Dome for nothing. Okay.
Is that what it's called?
We call it the Thriller Dome, right? It's actually it's the McCamish Pavilion now.
That's a dumb name.
But the McCamish family, they wrote a big check, so they got their name on. They got their name on the
All right,
pavilion,
good for the McCamish.
right?
Shout out McCamish family.
That's right. But I'm gonna tell you, great venue for a game. But we've beaten Duke and Carolina at home this year, and the vibe in that building was like it was when I was in school there.
Were you there? You were there for those games?
I was there for one of them. But I want to say it.
I don't mean to burst your bubble, pun intended, but the idea is to beat them in March, you see.
Listen, I'm taking a win against those guys whenever you can get it.
Fair enough. Touche. Fair enough. All right, I'll give you that one.
Maybe we're on the right track with basketball.
All right,
so,
you're the man, Steven. Thanks for coming, man.
Hey guys, I appreciate the invite.
Thanks, Steven.
We'll catch you later.
All right. Thanks, Steve. Thanks,
Steven
Weitzel.
Weitzel.
Definitely get Steven back on the show.
Yeah, he's great.
Great.
You know what I like about Steven is that he brings a great perspective that is different from my perspective or Strazza's or a lot of our other guests, right? He's got $1 billion, $2 billion, $3 billion in assets. He talks to a lot of, high net worth families. He's based in Georgia, not New York or California. So like a lot of different perspectives coming from Steven, looks at the world in a similar way that we do, has different conversations and does something different for his day job too. So it's cool.
Yeah, a couple of bones to pick I have with what a couple of things you guys said. Not that they're that big a deal. His comment about the volatility in rates when the Fed hasn't done anything the last 9 months. I would argue that they have done a lot in the last. They didn't change their rate, but they signaled a change in policy, and they said, "Hey, listen, we're flipping the book here a little bit, or at least we're no longer really interested in raising rates. We're maybe time to start thinking about lowering rates." Right? They said that. That's a change. So it's not a quantitative change, but it's a quality nonetheless. And your comment about the index is not really going anywhere. Don't really know where you got that from. The U.S. indexes, I mean, all-time highs. So,
yeah, barely.
Okay, you got me there. Barely.
I mean, the indexes hadn't done anything for 6 weeks and then just made new highs at the end of last week.
Barely. Yeah. Okay. Barely. You got me. All right. Let's do one or two and then stocks, and then we'll bring Ian Cully on. Let's talk about Domino's Pizza here this morning, just blowing it away. Actually, their sales number was a little bit light, but they're raising their dividend by 25%. They announced $1 billion buyback.
The fact that Domino's, like, this always, I don't want to say it ruffles my feathers because it's just hilarious to me. But something as terrible as Domino's Pizza looking like this.
They know what they're doing, man.
They're crushing it. Like, think about how much money Domino's Pizza shareholders have made despite the fact that they make unedible pizza. That's impressive.
I would argue most of the country, you probably can't get pizza that much better than Domino's. You really can't in most of the country.
Well, whose problem is that?
That's their problem, right?
That's
exactly.
Right.
Anyway, right. Domino's, like I said, EPS beat, dividend raise, $1 billion stock buyback. It's a monster. We talk about this every single quarter. So I don't know what it's up today, but 9% now? 8%. All right, good day for Domino's.
They were considered a tech stock, right? Because I guess they have like an app or something.
No, it's because most of their largest segment of corporate employees were in their like technology department.
Is that really true?
That's what they said. This was
doing
like
what?
Building the app. And then the other one I had here was Li Auto, LI. Kind of reporting, giving light guidance, right? Their delivery guidance was light, but they're coming off like a massive year of growth. So all in all, they're up 12% this morning. So it was a good quarter and good reaction.
So it's $40 billion Chinese auto company. Allegedly, they make cars. Do we believe them?
Yes, we do.
We believe them. Okay.
Yeah, we do. Yeah.
All right.
I've seen them not in person, but I've seen videos and I've seen them on the streets.
And you sure they're not deep fakes?
I guess no. How could I be sure of anything? Really?
Well, it's verified on the blockchain. You can.
Okay. Yeah. Again, you got me there on the blockchain. Okay. Elsewhere in news, Alcoa is making a deal. They're buying an Australian Illumina is the is the company, $2.2 billion. And we have yet another weight loss drug. This one trades OTC. Zealand Pharma, ZLDPF is your ticker. They had some good phase 2 data out this morning on their weight loss thing. So stock trades in Europe and was up like 30%. something like that.
Illumina,
So,
sure.
yeah. That's what I got on the news front, and it is 9:42. Hot corner today was not interesting. I looked.
Not interesting or not interesting to you?
I mean, I don't think it was interesting in general, but unless you disagree.
I do not disagree.
Aha. Ha ha.
I do
Okay.
not disagree. There's not much. But isn't that typical for Friday filings?
Yes, it is.
Like rarely do we come in on a Monday and you got like these like, oh my God, did you see how much this
Yes.
guy bought or whatever? Like that's hard. We don't see much of that.
No, we don't. But we do have Mr. Ian Cully on.
Yeah, bring him on.
And it's been a minute for Ian, so let's get him on the show. Talk, and he came ready today. He is pumped. He brought like 15 charts.
Are we
Lots
talking lumber? I think we're talking lumber.
Oh gosh, I hope so. Let's find out.
Good morning,
Ian
guys.
Cully- Whoa. What is it? What happened to the hair?
Oh yeah, I cut it.
Wow, dude.
Oh.
I don't like it.
No, I got to keep it easy. I got to keep it nice and
I like
easy.
the fro. I can't believe you cut it, man.
It's just this is so much easier.
Oh, but you were
myself.
leading the league in afros.
Yeah, maybe in the fall.
I like it.
Maybe in the fall.
Ian, I like it.
Thanks.
Listen, I like you as a person the same as I did before. But I'm a little heartbroken, I'm not gonna lie. I was a big fan of the fro, dude. Big fan of the fro. So when Spencer wakes up in the morning, I know for sure that what he wants to talk about are lumber futures, right? Spencer's like, yeah, let's get it.
No,
Why don't we start
I
there?
just want Ian to be excited. I want to talk about what Ian is excited about. So wherever that takes us.
I was dropping charts in the chat when you guys were talking with Steven. I mean, that's an awesome conversation. I caught little snippets of it. So yeah, I agree with a lot of what he was saying. And I really liked the point he made about just trading what's in front of you. Right. And when your big macro thesis actually hits, it's like hitting a parlay.
Yeah.
I thought that was a great analogy.
And not only the macro thesis hitting, but then all of the assets need to do what you think that they were going to do, which you can get your macro thesis right. Like there was a guy, I'm not going to drop any names. There was a guy who was like super bearish in 2007, 2008, early, but ultimately got it right. But instead of just shorting stocks, which is what his thesis were, that the U.S. stock market was going to collapse, he bought Chinese stocks instead, which ended up getting hit even harder than U.S. stocks. So he was right on what happened and then executed poorly. And I know that because we got a bunch of ACATs from this particular guy. And I remember seeing the holdings and it was like all Chinese stocks and gold miners. And I'm like, why didn't you just short stocks? That's what you thought was going to happen, which was a great lesson. And then also in my own so it's watching other people royally screw up is great learning. That's always the best way to learn. But usually you got to learn with your own mistakes. And I definitely used to do that. It would be like, well, if the dollar does this and then rates do that, then emerging markets are going to do this. And then, so short basic materials. It's like, what? Why don't you just go with the first one, right? So it's a great point. Good catch. And for those listening out there, great lessons.
100%. When it comes to rates in the dollar, I'll be honest. I'm bullish the dollar. I think the dollar goes higher here, and
relative to what?
Just relative to all other major.
So the dollar index versus euro, yen, British pounds.
Yeah, versus the Aussie, Kiwi, all the way down the line. The CAD,
EM,
the yen. I don't know.
EM.
I would yen, the Japanese yen.
Most I know. I'm saying EM.
EM. Yeah,
new lows for Brazilian real, Chilean peso, all making new lows.
I don't know about new tactical lows.
Chilean peso is making new multi-year lows.
Yeah.
Real making new 4 or 5 months lows. Yes.
Yeah. And the reason I think that's how it's going to play out in the coming months, quarters, is that the Fed signaling that rates higher for longer, definitely not going to cut anytime soon, at least not in the next couple meetings, kind of kicking that can further down the road towards the end of the year. So what's going to happen if Europe or Canada start to cut first? right? I think if that starts to happen, if those dominoes start to fall, then we're going to see a stronger dollar, because it's all about interest rate differerentials right now. It's all
Aussie getting hit today. Aussie getting hit today. Kiwi getting hit today. CAD getting hit again today.
Yeah.
I did think it was interesting that the dollar was down every day last week.
Yeah, dollar got hit last week. I think the Kiwi
bonds got a treasury bonds got a bid.
Yep. So yeah, it'll be interesting. Rates are continue to catch higher. I mean, that underlying trend remains intact. It was like 4.25 is the big level for the 10-year, and it's just hovering right around there.
And what about what Steven said about the tips relative? Same thing.
Yeah, inflation expectations they haven't rolled over. They haven't broken down. Whether you're looking at tips relative to treasuries or if you're looking at break evens, 5, 10 years, doesn't matter.
Drop those charts in the Slack, the break evens, the updates.
Yeah.
I mean, not this very second, but
yeah,
when we get off the show.
And then, we look at those pro-cyclical, economically sensitive commodity contracts like crude, like copper, carving out constructive bases, and even lumber. I mean, talked about lumber last week. I just dropped a couple of lumber charts into our channel.
And what does that mean? What is that? Why don't you explain to the folks what that means? Because I personally am probably never going to trade lumber futures for the rest of my life. Probably. I don't want to say never because you never know. But I have this painful memory of walking through Times Square, looking at my phone, getting stopped out of my lumber futures. This was a long time ago. And I said, that's it. Never again. They're not liquid enough for me. No thanks. But you never know. Maybe one day.
Yeah. I've never traded them personally. And
really?
I don't think I ever will. I don't think
you'll be all right. I think you'll be all right. It's like shorting crude oil futures. Do you really want to do that?
Yeah. I just don't want to go there for that point. It's just really, it's thinly traded.
So then what does it mean to you then? So for us that are never going to trade lumber, are probably not, and most of the chat here, my suspicion is they're not trading lumber futures either. So why should we care about this?
To see demand for lumber just speaks to economic growth, right? It just to see lumber catch higher, to resolve above 588, this multi-year base here would support higher prices in home building stocks, right? Homies are probably doing well if lumber's catching higher. And then if we zoom out, look at the bigger picture for lumber futures. This is what really has my attention, and we've been talking about this for a while now. Commodities breaking out of multi-decade ranges and carving out new ranges as this potential commodity super cycle plays out. Here we got lumber breaking above. Remember 2021, 2020, when lumber futures ripped higher, absolutely ripped, and everyone
couldn't. But there was a supply, you couldn't get them, right? That was the issue.
Yeah, right. It was a supply driven rally, but nonetheless, here we are, 450, that former area of resistance. Act as resistance, since early 90s.
So 450, big level long term here, 450 for lumber futures.
Now it's support.
Yeah.
So at the very least, if lumber doesn't break out here and it's printing new multi-year highs, as long as it doesn't roll over, as long as it continues to find support around 450, I think that's constructive.
Can we get into energy, Ian? Because we've got, it's really been the refiners, Marathon Petroleum, as we speak, literally making new all-time highs right now. The crack ETF, CRAK, hanging in there pretty damn good. If we're going to be in energy, do we have to be in the refiners, or do you think we got rotation into the explorers and producers or the oil services?
I think we get rotation. And Mary was asking me this question last week, and I told her, just go with what's working. Just go.
The only ones working are the refiners, though.
Well, there's some E&P names that are working as well.
Little ones.
Little ones, exactly, small ones. Some oil services names are looking good. But yeah, just go with what's working. I mean, we've been, pounding the table on energy. We've been putting a bunch of trade ideas out, and a lot of them are working. So I don't think we have to just stick with one particular industry group, though those oil refiners are performing really well.
Ian, what else is besides the things we've just discussed? What else has your attention right now?
I'm always thinking about rates in the dollar. I think
I was going to say gold,
that's always front and
silver
center. I can't-
sucks.
Gold,
Yeah.
you're always thinking about rates in the dollar. When it comes to gold, when it comes to precious metals, I mean, Newmont just undercut its 2020 low
Ugh.
last week, right? I mean,
Ugh.
this is the bellwether. This is
Ugh.
the bellwether. Now, I mean, we can, really get really close to the chart and identify, a bullish divergence on the 14-day RSI. But I mean, come on. I mean, these things look terrible. And on a relative basis,
Ugh.
GDX printing new lows relative to the broader market, SPY. GDX printing multi-year lows relative to GLD, right? These mining stocks, they look terrible. Now,
By the way,
there's a
GDX relative to SPY, all-time lows.
all-time lows.
Never
Since
been
its
lower.
inception in 06, yeah.
Right,
Yeah.
since 06. That's right.
The XMEs having
Lowest weekly close relative to the S&P 500 in the history of the gold mining index fund. Ugh.
Yeah, it's terrible. It's terrible. Now,
There aren't any AI stocks in the GDX, though. That's the problem.
That's right. No NVIDIA. No
That's right.
NVIDIA in GDX. But there are a few names that do look that are holding up. Orla Mining, a small miner that was printed a new high last week. Buenaventura, coiling.
You
above
didn't
our-
say that too terrible. That was pretty good there. I like that.
I'm practicing.
Yeah, see, I could tell. Yeah, Buenaventura, but aren't you getting more isn't it like a special situation because Buenaventura doesn't look like any of the other gold mining stocks?
It's a 50-50. It's a blend. It's a copper gold blend.
Yeah, but so's Freeport McMoran, and that looks terrible too.
Freeport McMoran's it's predominantly copper. It's got some gold in there. It's just
And
more
Buenaventura has
like
more.
90-10.
Buenaventura's more.
Yeah, it's more evenly balanced. And then Harmony Gold, Harmony Mining, a gold mining company is doing really well. HMY holding above our risk level around 550, but it's just barely holding above that level. And when you look at the bigger picture, they all look the mining space looks more like GDX, right? I mean, there's miners that have just absolutely fell apart last week. So as constructive as some of the charts do look, it's definitely not a space I want to lean into right now.
Brennan,
What do you say? Do a little recess. Stick around, Ian.
Brennan says Cully is the man. Ian and I both back in the saddle, so we'll be doing some what to fix this week for sure. Ian, we've been on a bit of a hiatus here, but we're definitely there will be more. So so more Ian this week, everyone coming your way. Let's do some recess though, and we can hop out of here.
Let's do it. Ian, quick, before the recess, do you know what year the Philadelphia Gold and Silver Index was created?
That's a great question.
Created anybody?
Sometime in the 70s.
That are still alive or not broke?
I would say early 90s.
I mean, my data goes back to 1990.
Yeah.
But I thought that it went back further. No? I would have bet my life that it was that this one's more old school. I guess maybe it's not.
No.
My first thought is the 70s.
I thought it went back to the 70s too. I'm gonna find out because for some reason my data is only going back 45 years, and that is just not enough. All right, so ready? Hold on, I got a good recess. This is a good one. So one of my neighbors recently discovered who I am, right? Because I don't really talk about that stuff. When I lived in California, nobody had any idea what I did for a living, and it was fantastic. So one of my neighbors recently discovered who I am. He's like, oh, I got into FinTwit back in the day, and I needed to come back, so I did. And then I saw you, and then I saw you have a morning show. So anyway, one of my neighbors watches the morning show. And the first show he's watching, I'm ripping into people that are very like anti-woke, right? Like people that are so anti-woke that they won't buy certain stocks and it lets them impact their investments. And it's our job as investors to recognize that and find the pain points, like, and by the way, it goes both ways, right? Remember like the ESG scam for the other people on the other side, right? So like, we're not playing favorites with politics here. We literally find the pain points of people that are allowing their politics to get in the way of their investing and take advantage of it and take their money, right? Like that's my goal. And he's telling me all this story, and he's like, I'm that guy. I'm the guy that you're talking about. He's like he's like a prepper. Like we're hanging out the other day. He's telling me he's got 3 months of food and da 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 da. I'm like, dude, if zombies come, I'm going to your house, bro. Like he is a real prepper. He's my neighbor. He's a super nice guy. Like we have a blast together. I think he still thinks that he's in college because he loves to party, which I'm down for. And he's like a real like doomer prepper. And he admitted that he's allowed that to impact his decision-making in the market. And he's been working on it. And then he saw me talking about exactly that. And it hit home. So for those of you out there, like be aware of that. Like kudos to him. I'm not going to mention any names. So kudos to him, admitting that even before I was ripping him, that, he allowed his political beliefs, because he's very extreme in his political beliefs, and he admits that, and he allowed that to get, to impact his decision-making, which hurt his returns. So just great lesson for everybody, and reiterates what we talk about here.
My advice to any of those people would be just, if you want to feel better about the future, read any of Warren Buffett's letters. He's so folksy. He makes it seem so simple. Investing in America, investing in the future, in real sustainable businesses, Coca-Cola, American Express, Geico. He will make you feel good about the future. Warren Buffett
has done well because he invests in things that are not going to change, because it's easier to invest in things that are not going to change and instead of trying to find what's next.
Also, his whole thing is, but just like letting America do the work for you, right? That's kind of the thing. So if
Coca-Cola, sugar companies, Dairy Queen, Warren Buffett knows that Americans are just going to get fatter. And he's made very aggressive bets on that, and he's been right. So shout out Uncle Warren.
I always feel good about the future after reading one of his letters. Ian, do you have any recess? I'm trying to think if I have anything worth sharing. I don't know if I do.
Nope, just send the pediatrician. Oh. Take the kids to the doctor. Make sure they're okay.
That's good advice. Take the kids to the doctor, because me, Ian, and Spencer, us knuckleheads trying to figure it out. Like my wife the other day, she's like, "Oh, what do you think is wrong with our kid?" He's like, "Oh, what do you think is wrong with him?" I'm like, I have no idea. How am I supposed to know what is wrong with the kid? Like I could guess if you want, but that's not going to do any good. By the way, just to follow up on what Spencer and Ian were talking about, to quote Phil Pearlman. If whenever you think the world's about to end, go for a walk.
Yes, absolutely.
Walks highly underrated.
Good advice. Good advice from Dr. Phil Pearlman here. Shout out, Pearl Dog. Shout out. Had a great lunch with Pearlman last week.
Oh! On that note, JC, did Phil eat the rice?
He did. He ate the rice. I swear. He says because he ran 8 miles in the morning, so it was fine.
Oh yeah. You burn it. You burn it right off.
Coming. All right.
Apple that Pearl.
Right, fair enough.
Oh, bro, I ran 8 miles. I can eat the rice.
All right, that's fair. Hey, that's it for our show today. Thanks to Stephen Weitzel. Thanks to Ian Cully. Thanks to all of you in the chat. I don't think we're doing a flow show today because Steve is out. But if we do, it'll be just Sean running solo. So just check back here at the usual time, 11:30. See if we do it or not. It'll be a surprise. Tomorrow on the show, Mr. Mike Hurley. That'll be a fun one, JC.
Oh, Mike Hurley's coming tomorrow. Nice, dude.
Yep. Oh, yeah.
Big fan of Mike Hurley. Huge fan. I was on the phone with him a couple of weeks ago. He's the man.
Gonna be a good day. All right.
Very much looking forward. So, guys, if you're out there listening, make sure you're here tomorrow. Mike Hurley is the man.
Oh, yeah. All right. That's what we got. Thanks, everyone. Smash the like. Tell your friends, tell your neighbors, hit subscribe, go make some money, and we'll see you later.
Even my neighbors are watching. A scary thought.
Have a great week.
I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah.